This is a question debrief of the September-December 2025 case study, which is the 50-mark question number 1 in section A of the exam. Through this question or through this video, we are going to be looking at the super easy technical and professional skills marks that you can get by following a certain template that I'm going to talk about and focusing on the answering techniques that need to be applied to all the parts of this question. Let's start by looking at the background information that is given. I've just highlighted the key parts that I need to remember as I continue to read my scenario. When you open your question in your exam, you would see a screen similar to this. So this is the background information. And then on the left-hand side, you would have all the exhibits which would open when you click them. So today's date is the 1st of July. This is a listed company. The year end is the 30th of September, and this is a new audit client for my firm. They operate in the energy industry and they specialize in manufacturing and installing wind turbines for use in offshore and onshore wind farms. And they've explained what a wind farm is. They've given the names of all the exhibits that I won't worry too much about because I am going to be reading through this one by one in any case. Now, in the actual exam or during your mock exams or practice of the full 50-mark question, it is highly recommended that you start by reading the entire scenario at least once very quickly to understand the story of that client and whatever has happened. And then the second time around, read the scenario more slowly, make sure you understand what the requirements are, and the second time around, start highlighting your answers to business risk and risk of material misstatement using different colored highlighters. So I'm assuming you've read through the entire scenario once on your own. This stage of reading the entire scenario once before you start extracting your answer is very important because there are lots of linkages between the exhibits that need to be created because that's how you will be able to evaluate your risks and get the available technical and professional skills marks. So I've read through the entire scenario. I'm now going to break it down step by step. Now, Exhibit 1 we know is always going to outline the requirements. So I am going to spend time in reading this very carefully. They have said that they would want me to use revenue as the basis for materiality. So in my risk of material misstatement requirement or part, I am going to use 0.5 to 1% of revenue to calculate and justify my materiality. And we'll talk about those super easy marks in just a few minutes. Using exhibits 2 and 3 only, you have to evaluate significant business risks for 8 marks. Now, this is very important. What this means, because we saw there were 5 exhibits given, this means I am not going to be looking at exhibits 4 and 5 at all when I'm answering for these 8 marks. Remember, there are a few things that you have to keep in mind. When we talk about business risk, it is always 2 marks per risk, but it's not very easy to get these 2 marks. The first mark is always for identification and the implication or consequence of that business risk. So why it is a problem for this particular client. But the second mark is for evaluation of why this is a problem or a bigger problem, particularly for this client. We'll talk about this once more when we get to this part, but just remember that. So in the actual exam, excluding the reading time, the time allocation that I would want you to give yourself is using the 1.5 minute per mark rule. So I am going to spend 15 minutes writing as many business risks as possible. Please don't just divide by 2 and think, okay, 4 are enough, because you don't know whether you've evaluated that risk well enough. So instead of mark managing it, time manage it. Write as many risks as you can, of course, keeping in mind that I need to evaluate it using the techniques I'm going to tell you in just a few minutes, but do that within the allocated time and move on to the next part. I would have spent about 20 to 25 minutes in reading the scenario twice, highlighting and planning my answer. This is just the writing time available. The second part asks you to use exhibits 2, 3, and 4. So they've added another exhibit to evaluate and prioritize risks of material misstatement. And they've given you a reminder that you need to decide and apply appropriate materiality level. Now, this requirement has quite a few marks that you need to keep in mind, and we'll talk about where the easy marks are. Now, I know for 18 marks, I am going to spend 27 minutes in typing the answer. But what exactly do I need to keep in mind? Number one, of course, I'm going to be using 3 exhibits. Number two, it is only risk of material misstatement. No detection risk can be written because this is not an audit risk question. So in case you're getting confused, in AA and AAA, you would have studied that audit risk is the risk that the auditor could give an incorrect opinion. And there are 2 elements, detection risk and risk of material misstatement. Because the requirement asks for risk of material misstatement only, I'm not going to talk about this being a new audit client, and because of that, opening balances, etc., being misstated and lack of understanding, DR being higher. All of that is going to be irrelevant for my answer. And ROMM, if you know, simply means concerns regarding double entries and disclosures in the financial statement. So that's the risk we'll be focusing on. They have asked me to evaluate, which means there's a technique for this. We'll talk about this. You could get up to 3 marks per risk as long as you follow the technique. They've asked you to prioritize risks. You get 2 marks for being able to prioritize this. We will be covering all of this in a few minutes within the video. And they've asked you to apply materiality. So this part in particular, 18 marks, is highly technique focused. And we'll see how easy it is to get these 18 and some professional skills marks. The third part, and this is a very typical requirement, so you know all the risks that you found in part B, and this is exactly what the examiner does every time. Out of those risks, you'd be asked to design procedures on 1, 2, or 3 of them. Now, this is a very interesting hint as well. So when I've read the requirements and they're talking about Z2's development cost, that means in your answer to part B, you should be discussing this as a risk. So that's like an easy hint that this is one of the risks that you should be talking about in the earlier part. For 6 marks, I am going to spend 9 minutes and I'm going to design audit procedures focused particularly on the development costs of the Z2 model, which has been recognized as an intangible asset. I will be clearer on this once I've read the scenario. Then for 8 marks, and again, this is going to be 12 minutes. So times 1.5 is going to be 12 minutes. I am going to use Exhibit 5 only and discuss ethical and professional issues and recommend further actions which should be taken by the firm regarding a request made by the audit committee. So this is a very typical part B to question number 1, part D to question number 1, where you are asked to evaluate and discuss different ethical and professional issues. So honestly, without having read the scenario, I would expect some additional assignments which are being offered to me, and I would be commenting on those. And they have mentioned that producing a sustainability report is not required by the local law. So they're not doing it because it's a legal requirement. So as I read the first exhibit, I'm very clear on what needs to be done, and I can now start outlining my template. I know this is really small and this is on purpose because I wanted everything to fit on one screen. Before you start typing your answer, within the planning time, which I said 20 to 25 minutes, I need you to outline the template that you must keep in mind so that you can fill it out for the easy marks. We will always start by writing the briefing notes format, which is to, from, subject, introduction, and you get your 1 easy mark for this. With business risks, I know the allocated time. I know I'm only going to be using exhibits 2 and 3. With risk of material misstatement, I know what my answering technique is. I'm going to write the range. I'm going to do the calculation, making sure I use the current year's figure and I pick up the right amount. So it's not 4.5 million or is it 450 million? Make sure you pick up the right figures. And I'm going to justify the risk, the materiality threshold that I'm choosing using risks from the scenario. We'll talk about all of this in just a few minutes, but we're just outlining my template for now. For each risk of material misstatement, I am going to remember to try and follow this format. I need to comment on materiality. So I need to say whether it is or isn't material where numbers are given, or it could be a disclosure that could be material by nature. If there's a calculation that I can do, like a percentage change or a ratio or a basic calculation, I'm going to remember to put that in. I'm going to explain the accounting rule for this particular scenario, not just the entire standard, but the part that relates to this risk in particular. I'm going to create a case link and discuss the risks. Now, this is where most of your technical and professional skills marks are. So we will be applying all of this to this question. And then I'm going to explain the financial statement impact. As you discuss the case link and risks, remember to mention if there's any judgment, uncertainty, estimation, management bias, etc. within that scenario or risk, because that's where the additional marks are. I will not forget to prioritize risks. So with risk prioritization, I'm just going to put that as a heading on my template so that I don't forget it in a hurry. I need to identify two significant risks and explain why they have been prioritized. This is the easiest way to get these 2 marks. We'll be applying all of these in a little while. Then I'm going to make sure I write procedures which are only relevant to development costs of Z2, and I am going to explain ethical and professional issues using Exhibit 5. So I apologize that this is really small. I wanted you to remember this at a glance when you're in your exam so that you can try and fill this out, and this would apply to all the other questions. So have that planning structure or template in your mind. I can now start my answer for business risks using Exhibit 2 and 3. So I'm going to show you the point given in the scenario, and then we're going to talk about what the business risks are. Please remember, business risks are problem this issue could cause for the business or the management, not for the financial statements. So take off your accounting auditor's hat and put on the business hat or the management's hat. So think from the business's point of view. So for example, this could cause me financial issues, not financial statements, but money problems and, like liquidity issues, etc. This could impact my reputation. This could cause operational issues for me, delays, quality problems, etc. Because of a non-compliance, I could potentially be paying fines, etc., etc. So think purely from the management's perspective. Let's start by looking at the first part of the scenario. They've given all this information. You could always pause the video and read this in your own time. I'm just going to focus on the key parts. So the industry has grown rapidly because governments around the world are setting clean energy targets. There's a lot of innovation required. And because of that, in order to remain competitive, they have to continuously spend a lot of money in design and development of improved models, and we're really looking at every 4 years. So if this were your company, what would your concerns be? So my concern would be, oh, I've spent all this money in researching into a new model. What if it fails? So my initial implication is that in spite of my research and of course, I spent a lot of time and money, there is a risk that the product might not be commercially viable. So it might not be successful, and because of that, my cash flow and profitability could be affected. So ultimately, the return on investment or the money that I've spent might not materialize. So my 1 mark is for any company which is in this sector, that their products that they're trying to develop might not be successful. That's just my first mark. I don't need long sentences or fancy words. I just need to talk about the fact that there is going to be a waste of money if this doesn't work out. And simply by linking it to another piece of information in the scenario, I could be getting my 2nd mark. And they have already faced this because of their Z1 model. So I'm basically saying that now this risk is a bit more real for them because this has already happened. So depending on how you word it, you could be easily getting your 2 marks for my first business risk. They've given all this background information about revenue. Like I said earlier, you could always pause the screen and read this, but let's just focus on the main parts. It takes them a number of years for a new wind farm project to reach completion. Contracts, on the other hand, are agreed in advance and there is a fixed price for each contract. So it's going to take me a long time and I've decided that the price is going to be like, say, 20 million. However, in the recent past, prices of my raw material have gone up, and because of that, the price is going to remain the same. My costs have gone up. So I've agreed the price, I can't change that, but costs have gone up. And this is an easy business risk. So my concern is that because of this, I could potentially be facing a number of loss-making contracts. So this is going to put pressure on your profit margins, and because they can't pass on the costs based on the information given to their customers, then they could be left with loss-making contracts. That's my first mark. And then we're just evaluating that ultimately this could be a sustainability issue in terms of the business. We're not talking about the environment, etc. In terms of the survival of the business, if they're not able to renegotiate their contracts or find appropriate raw material with a lower price. So we're saying, okay, although this has happened in the last 12 months, this is not like something that's going to end now. This could cause problems for the business in the longer term in terms of its survival if they're not able to renegotiate the terms with their customers. So I've kept it nice and simple. The 3 sentences written over here, you don't have to write all of this. Literally pick up words from the scenario, which is the price is fixed, but the costs have gone up. And because of that, the business could be facing loss-making contracts. So literally what I just said is 1 mark. And then for another mark, explain why it's a problem. There's more information given in Exhibit 3. This happened on the 28th of January. Remember, today's date is the 1st of July. So a wind farm has been shut down because there was a design defect in the Z1 model, which was produced by the client. The company, this client has suspended all sales of the Z1 model, and they're hoping for the existing customer orders that have not yet been fulfilled, they'll be able to sell the older, less efficient turbines to them. I would say this is one of the easier business risks to describe. You could talk about a number of things. Obviously, the first point is that it is going to cost money to fix this design defect. They're not just going to let you be, and you will have to get them sorted. So my first easy mark is fixing these issues is going to put pressure on my cash flows and profitability. So I need to get my second mark. I could talk about the fact that this is going to affect company's reputation, or I could talk about the fact that the existing customers might not accept the older model. I'm assuming they'll be okay with this, but why would they? They've paid a certain amount of money. They're expecting a later technology, so why would they accept it? So you don't have to write all of this. You could be writing either of these to explain what other problems should I be considering in addition to having to fix these current design issues. My reputation, because customers are going to now question the quality of my other products, or the fact that my current orders might also be lost because they might not accept the older designs. So I would say this is one of the nicer, easier ones to get your marks in. It seems to be bad days for the poor client. So on the 7th of May, transportation of 10 new wind turbines to a remote location was suspended because they were too big to fit on the road. They have said that the company will have to go back into negotiations with the customer and the local planning authority to work out how the road can be modified and at what cost. This is going to take 6 months to fix, and these types of issues are becoming quite common. If I'm very honest, I think the answer is all in the scenario. I just have to extract it and reword it. I'll get my first easy mark for saying that the delivery issues will reduce the company's revenue, because remember, we've read this earlier, that payment is only received when the turbines are delivered and installed. So I've spent all that money, my cost has been incurred, but I can't deliver this to the customer, and therefore I'm not getting any money. I'm not going to be booking any revenue. So that's really my first easy mark. For the second mark, there's so much else I could write. So I could be, they've mentioned that the problem is widespread because it's coming more common. So I'm concerned that these logistical issues are going to reduce the profit margins further in the future. I could also say that the delays could affect customer goodwill, or I could be penalized because of delay in fulfilling the contract. I will have to store these turbines somewhere, which is going to be a lot of money because they're really quite big. And my reliance on local authority is going to be an issue because I can't just assume I'll get the required approval and start working on the roads. So it's about the approval, it's about the cost of modifying the road, which is going to increase my costs. All of that can be evaluated using your information in the scenario. Now, please remember, I don't think I mentioned this, within the second evaluation point, you normally have your professional skills marks. So for this question, for example, in addition to 2 technical skills marks, if you talk about the reliance on the regulator for the planning permission and that could be a problem, you'd get an additional professional skill mark. So your second point is very important, not only for technical, but also professional skills marks. More information in Exhibit 3, they've mentioned over here that the approval for new wind farms is being delayed across the industry. So the planning permission is long and complicated, even when the contracts have been agreed between the energy provider and the client. Because the local government is not giving permission for new farms, then ultimately there are going to be delays in the entire delivery process. So my risk is, if this were my business, my concern is if there's no planning permission for the wind farms where the turbines are going to be installed, this is going to affect my revenue and inflows in the short to medium term. So that's my first initial easy mark. If there's no demand, of course, my inflows go down. I could also talk about the fact that the delays in planning approval for projects where existing contracts have already been signed could create an order backlog, right? Because production dates could change and they could clash with other scheduled projects. So I need to talk about how this delay is going to affect my other projects. And like I said earlier, if your evaluation is based on the magnitude of that problem for this particular client or a discussion of another impact, you could potentially also be getting extra professional skills marks in addition to these 2 technical marks. So this one was more focused on, oh, what's happening in the industry overall. There's another incident that happened on the 20th of June, and this is regarding new safety regulations which might be coming for those working in renewable energy. Within the scenario, they have said that there are concerns regarding the safety of people who actually go and work on those large turbines to fix them, etc. And recently, several of the employees that worked for the client have been injured when they were trying to repair an installed wind turbine, and they are looking to raise a legal claim against the company. So this is an easier business risk. My concern is the compensation costs are going to affect liquidity. This is going to affect my my reputation because of the negative publicity. My customers are going to be affected. With the tighter safety regulations coming up, I would have to incur extra cost to achieve compliance. So I would say my first mark is an easy one. And then for the other mark, I need to talk about what else should I be worried about. So paying off this claim in terms of liquidity and cash outflows, but then also the impact on my reputation or the fact that the new regulations could mean extra or would mean extra costs for me, which is again going to affect my liquidity. So not too difficult to discuss this business risk. So I think with that, we're basically done with the business risk part. You've seen how, based on the information given, we've focused on why it is a problem for this business. We've not discussed anything from the financial reporting point of view. It was all based on problems that the management should be worried about. Moving on to the super important 18 marks, which is evaluate, prioritize risks of material misstatement, and determine and apply an appropriate materiality threshold. A quick reminder, for revenue, it's 0.5 to 1%. For profit before income taxes, it's 5 to 10%. And for total assets, it's 1 to 2%. Another very important reminder, within these 18 marks, you have 3 materiality marks. So you're really just answering for the remaining 15. Okay, so that's what you should keep in mind. It'll give you a bit of comfort. Let's start with my easy 3 marks. My range is 0.5 to 1%. I get 1 mark for that. For using the right figures to come up with the right calculation is another mark. And my last mark is for the justification. Now, for the justification, it's very important that you always choose the lower end, or could be a mid-range. So never ever the higher end, and always have a valid reason for this. So don't say I'm choosing the low end because this is a listed company. That's going to be a 0 for this 3rd mark. The easiest thing to do is pick up an example from the scenario, because you've read through the scenario, and just use that as a justification. Because significant risks have been identified in revenue and intangible assets. You could just stop here. And this is a new audit client, and we have less understanding of the business. I'm just using this as a justification for materiality. I'm not doing this as a part of my risk evaluation, the new client element. Remember, intangible assets was given in my procedures. So that was a hint that this is automatically going to be a risk in your scenario. So I could just use that as an example. So that's my 3 out of 3 technical marks, done very easily. So remember, we would have started off with 2 from subject. Just at the start of the entire case study, I would have done my business risk evaluation. I'm moving on to ROMM, and I'm starting off with my materiality calculations. Also, please remember, for ROMM, we're using Exhibit 4 as well. We're now going to read the relevant parts of the scenario again, but this time around, looking for risks of material misstatement. So let's start off with a relatively less significant one, but still there and still important. If you remember, we've already read that the contracts are agreed well in advance, they have a fixed price, and the costs have gone up. And before this, they've also mentioned that all revenue contracts are established with one performance obligation, and revenue is recognized when the client delivers and installs the turbines. So remember this as we proceed with reading the rest of the scenario. Now, if I just stop here for a second and don't look at any other information, I need to think of IS 37. We have agreed a price, and I can now see that some of these contracts might be loss-making. So I need to apply my FR and SPR knowledge, or my financial reporting knowledge, to evaluate what the impact of this piece of information could be on the financial statements. So with risk of material misstatement, my focus has to be on the financial statements that I've put on my auditor's hat now. This is what I should have come up with. So I don't have a number for the onerous contracts or the loss-making contracts, so I can't comment on materiality. However, a relevant calculation that I can get easy 1 marks for is the operating margin, because that would of course be linked to a loss-making contract. So I can start off by getting an easy calculation mark for saying the margins have fallen from 3.7 to 1.5. I then think of the correct accounting rule and explain it. Please note, I haven't written the accounting standard number because there are no marks for it, not the name or the number. So I'm going to explain that an owner's contract is one where the unavoidable costs of meeting that obligation could or are expected to exceed the benefits that I will get out of it. And for this, a provision must be recognized. The risk is that because of the increase in the cost, some of the contracts could be loss-making, and they might not have recognized this as a provision or as an owner's contract. And because of that, your profit is going to be overstated and liabilities understated. So it's not a significant risk, mainly because I don't have a number yet, but this is something that could get me easy marks in the exam. We have more information given regarding the accident, but please be very careful about how you word this. Don't just jump to a conclusion that a provision must be recorded. Remember, for a provision to be recorded, there should be a present obligation because of a past event, a probable outflow of economic resources, and then the amount should be estimated reliably. Now, based on the information given, I don't have a number, so I can't comment on its materiality, so I'll jump directly to the accounting rule. I'll explain when a provision should be recognized, so present obligation, past event, probable outflow, and reliable estimate, and I can get quite a few scenario-specific risk marks. Yes, there is a present obligation because of a past event, because an accident has already happened and employees have been injured. However, I cannot determine if the payment is probable. So it is likely that instead of a double entry, you would need a contingent liability disclosure. The risk is that the disclosure has not been included, and because of that, there could be inadequate disclosures in the financial statements. If you simply write the risk is provisions could be understated along with expenses, you're unlikely to get marks for this. As auditors, we need to apply the accounting standard instead of jumping to a conclusion that an expense must be booked. So I've used information in the scenario and done my risk evaluation, starting off with the accounting rule. In Exhibit 4, we had some numbers given, so information extracted from their management accounts. These are the numbers we would have used for materiality. Now, I can look at these numbers and we'll just look at the calculation for now because I won't come back to this screen. But I have calculated the support service being 11.5% of total revenue, and I have calculated that intangible assets have gone up by 26%. There's a note 1 and note 2 where I am going to be getting extremely important and slightly easy marks. So this was given in the scenario. They've said, and this is new information, during the year, the company has started offering a 10-year support service for their installed wind turbines, and 1/3 of the customers have opted to include this in their contracts. So I've already seen that it's about 11 something percent of the total revenue. This is in addition to the regular warranty. No changes have been made to the performance obligation established in each customer's contract. So if I think like an accountant, they would debit their cash or receivable and they would credit their revenue for the amount of this 10-year support service when the turbines are installed, which I know is incorrect. So I now need to convert this knowledge into super easy and very important marks using my answering technique. Let's start off with my identification of the problem. So I've identified that the problem or the concern is they've only established one performance obligation. I get no marks for this. I'm starting off with talking about what the issue is. I get 1 mark for my accounting rule that the contract's separate performance obligations must be identified and revenue should be allocated to each based on their relative standalone selling prices. The risk is that the revenue from the service cost is not being separated out. This should be recognized over the 10-year time period. And if this is not done, revenue could be overstated and deferred revenue or liabilities understated. Now, this is a very typical comment on your early revenue recognition. The interesting and very important parts are this linkage. So going forward, wherever I see a valid reason for management bias, I am going to get one professional skill mark for talking about this. My concern is that because operating profit is expected to decrease by 51%, this early recognition of revenue has been done because of management bias, because they want to present an improved picture of this listed company. So I haven't said, oh, there's management bias because this is listed. I've given a valid reason for this. This is a listed company which is struggling because their operating profit has gone down, and this is why they could be manipulating the revenue by recognizing it early. So management bias, when linked, is going to be an extra professional skill mark. There are no technical marks for management bias, but they are super easy professional skills marks. And please also note that you get half a mark for your calculation. So across question number 1, which includes BR and ROMM, you normally have about 2 to 3 marks for calculations as long as they are used with valid risks. So my recognition risks over here regarding revenue recognition. Moving on to the next part, and this is something that the examiner did say very few people picked up, but the examiner had given you hints. This part was given in the scenario. I appreciate the screen is a bit smaller. You can just pause it and make it bigger. Now, this support service, she's giving you hints here, is a new strategic focus for the company because there are higher margins. This is reviewed by a board on a regular basis when they are considering and deciding resource allocation. And if there was any confusion, the examiner has given you a hint to say they do not intend to disaggregate overall revenue for reporting purposes. Now, for a listed company, this is quite a bit of knowledge given, hinting at the application of IFRS 8. So this is a listed client. I get a mark for, I don't get a mark for saying it's a listed client. This is for the accounting rule. That is segment where the total revenue is expected to be more than 10% and its performance and resource allocation is being reviewed must be reported as a separate segment. I can now start my scenario linkage. I'm going to get half a mark for saying it does meet the definition of an operating segment because the total revenue is going to be 11.5% of the revenue, the segment's revenue, and it is being actively monitored, suggesting that the results will be looked at for decision-making purposes. So I'm saying it is an operating segment and then I'm justifying it. And I am then, of course, getting my calculation marks in addition to this. The risk is that the disclosure might not be properly given and could be inadequate. And again, I get my professional skepticism or professional skill mark for saying that they might be trying to hide the fact that their main activity is not doing well. So if I'm not showing this as a separate operating segment, the shareholders will think all of this is coming from the main activity, which is manufacturing and installation of turbines. So I'm now not saying there's management bias because it's listed. I am giving you a valid indicator for me to get this mark. We then have intangible assets. I know this is going to be important because it had so much information given in the procedure. So I will know that this is something I'm going to talk about in detail. Now, the company recognizes costs in relation to development of its turbine models as intangible assets. So this is ICE 38. Z1 was finalized at the start of 2024 and went into production from 1st of February. The company amortizes them from the date when the model went into production. I'm okay with that. The amortization period is 15 years, which is the average life of the installed wind turbine. Now, that doesn't make sense to me at all. So it's once you've installed it, why are you using that useful life? So I'm going to talk about amortization period being a risk or a problem. And then we already know that with this intangible asset, there have been some problems. So I'm now concerned about this being impaired. So I'm going to talk about two different aspects now. Let's start off with the impairment part. So now I can finally talk about materiality. So I get my materiality professional skill mark. So please note, I've not done a percentage calculation. I've simply said it is material based on the chosen threshold. I get a calculation mark for saying it's gone up by 26%. I get a mark for explaining the accounting rule for impairment. So carrying value is higher than the recoverable amount, and recoverable amount is the higher of fair value and value in use. I'm now going to be getting a lot of marks for the scenario linkage. The fact that there are problems with Z1 is an indicator of impairment, which means that the development costs should be tested for impairment. Getting a market value for this specialized asset is going to be more judgmental, and I could potentially be getting an extra professional skill mark for recognizing there's judgment here, which means it is highly likely we will be using, or the management will be using, the value in use. And then my concern is that the value in use is going to be quite risky. Sales have been suspended. What are you going to earn from this? Remember, when we say recoverable amount, it is how much can you earn from this in the future compared with the fair value. Don't think fair value is going to work out. I'm not going to be earning much because there have been problems with this design and sales have been suspended. And therefore, this is going to be a highly risky area. Risk is impairment review has not been done, and because of that, assets could be overstated along with profit. So if you were thinking, oh, I'm just going to write impairment has not been done, you are or have lost out on lots of easy marks. So if you see for IS 37, if you see for the onerous contracts or the provision, or if you see for impairment, across all topics, I am applying my knowledge to the scenario. I'm not just saying it's not done and this is the impact. My focus is on application of all of this information. And that's where my evaluation marks are. This is why in AAA the examiner says evaluate the risk, not just explain it. We can then talk about the useful life. I get a mark for saying it is correct that it is development costs are being amortized because they do have a definite life. My concern is that the time period over which they're amortizing it is incorrect. So lifespan of the turbine once it is sold and installed is irrelevant. It should be over the amount of time which is basically taken in production, which is approximately 4 years. And because of that, intangible assets could be overstated, amortization expenses could be understated. And why would they want to spread out the amortization cost? Because they want to manipulate the profits of a listed company. So again, I'm talking about management bias. So I haven't just put in management bias everywhere. Wherever there seems to be an intentional overstatement of assets or profit, that's when I link it with a valid indicator. We have more information coming. This is where the procedures were based on. During the year, the company recognized 550 million for development costs. And this is the new model, which is Z2, and it is based on the Z1 model and aims to develop further efficiencies into the turbines. So this is now new cost that has been capitalized as intangible asset. I start off by commenting on materiality because there's a number given. I can say it is material based on my threshold. I get a mark for the accounting rule that development cost can only be recognized when the pirate criteria has been fulfilled, which includes probable economic benefits, technical and commercial feasibility, etc. The risk is that because of, see, it's based on Z1 and this has design issues. So I'm concerned that this might not be technically feasible, which means the criteria is no longer being met. And because of that, this needs to be expensed off. If not, assets and profit are overstated. So step number 1 is, this is me saying, are you sure this is an intangible asset? That's my first question that I've put over here. My second question is, okay, if you are, because if maybe you're going to give me valid reasons later on, I'm still at the planning stage. Then my next question is, what about testing this for impairment? For assets which are not yet available for use, which is the case here, they should be tested for impairment annually. So the carrying value may be impaired. There's a risk this has not been done, and because of that, your assets and profit could be overstated. And again, I have a valid reason for management bias that they might not want to record impairment because the shareholders would be very interested in how they're doing with the technological developments. So I'm giving a reason every single time. We're now finished with the risk of material misstatement. Do not forget my heading, which was I have to prioritize two risks. This is my recommended approach. You'll get easy 2 marks with reasoning. So I've prioritized the impairment of the Z1 turbine and I've prioritized inappropriate revenue recognition. So I've given a reason for this and I'm getting 2 marks. I don't want you to try and place them in the order of most to least significant because that'll take a lot of time and it could end up being confusing. Just do your risk evaluation in the order you find them, or maybe whatever you're comfortable with. And then at the end, give a heading to say conclusion or conclusion on risk prioritization and simply prioritize 2 risks with reasons. Easy marks there. We can now move on to the next part, which was 6 marks for audit procedures on Z2, and we now know what the problem is. I'm in a better position to come up with this answer. So I would have made sure I put Z2 development cost in my risk answer when I was reading the scenario for the very first time, because by asking for procedures, the examiner is giving a hint that this is going to be a risk that you must discuss in the first section or in the earlier section. So for 6 marks, it is going to be 1 mark per procedure as long as there's a source and a purpose. And we now need to make sure that we don't write random procedures such as board minutes and written representation. My procedures should be focused on 3 key problems. I'm going to confirm the criteria of development cost. If they're okay to be capitalized, I'm going to see if they have been impaired, and I need to evaluate the appropriateness of the useful life. So with that in mind, you could always pause this and read this in your own time, but I've broken this down to simplify the procedures. Source and purpose are important. 550 is not one transaction. I'm going to get a breakdown and cast it for its arithmetical accuracy. Casting or addition or arithmetical recalculation is only half a mark in AAA. I'm going to discuss with the management what additional research was carried out regarding the Z2 model, because at the research phase, they should have been expensed off. This is step up from Z1. So before capitalizing the development cost, the research expenses should have been in P&L. So I'm asking them what additional research was done so that I can make sure it has not been capitalized. For the costs that have been capitalized, I need to confirm that they are correct. I could look at the source documentation such as invoices or payroll records. I'm going to ask the management what the impact of the design issues in Z1 model is on Z2. Will it affect the completion of the Z2 model? Will you need to make modifications to it? Very interesting. I am going to review documentation to confirm when technical feasibility of Z2 was achieved. So if this was done before the Z1 issues were identified, this needs to be looked at again, right? Because now things have been identified. And remember, Z2 was based on Z1. So when was technical feasibility identified or achieved? And discuss with the management whether the Z1 issues affect this assessment so that I can evaluate whether impairment needs to happen. I could be looking at financial budgets in relation to Z2 to see if now additional funds will be needed. Remember, one of the criteria is resources. So I'm confirming that for development expenditure. I'm going to ask the management the likely launch date and the anticipated level of demand. I need to see if this has been affected by the recent issues with Z1. One of the criteria is probable economic benefits. So I'm confirming that by looking at the anticipated demand. I can evaluate the assumptions used by management in determining the future cash flows. I could compare it to their order book to see if there has been any effect on their orders. I could review the details of amendments or changes which were made to the project or assumptions after Z1 issues were identified. I should be carrying out a sensitivity analysis on key assumptions to see how this cash flow would be affected, forecasted cash flow would be affected because of the new problems. Regarding impairment, I can ask the management whether an impairment review has been carried out. And if yes, I want to evaluate the methodology and their impairment model to see if it's reasonable. I could use an auditor's expert to evaluate the assumptions, and I could ask the management the basis or the assumptions for the 15-year amortization policy so that I can see if this looks reasonable, which I know it doesn't. So there were about 11 marks available. Please note, I've broken them down into, is this an intangible asset? So confirm the criteria, probable economic benefits, etc., etc. Are there resources? Is it technically feasible? Then if yes, impairment and useful life. That's what we've confirmed through the procedures. Moving on to the last part, this was a completely separate requirement on ethical and professional issues related to Exhibit 5 that we haven't seen yet. Remember, in 12 minutes, I need 8 evaluation points. We're not saying 8 issues, but evaluation points. Let's read this again, pause and read this in your own time. The committee has asked you to provide assistance with preparing a sustainability report and assurance on the same report. So these are two separate engagements. If you read this in a rush because you're running short of time, you won't be able to get the available marks. So regarding the assistance, they want you to give input regarding the sustainability measures which should be selected and how these should be prevented. So they want me to prepare or help them prepare the sustainability report. They want me to give assurance on that report. And then they have said for these engagements, audit fee will increase by 15% and only if the work is favorable and in line with the company's expectations. Remember, each engagement needs to have a separate engagement letter and separate fee, and this favorable expectations is basically contingent fee. So there are 3 different issues that I need to evaluate for 8 marks. Very important, nowhere in my scenario can I recommend that the work should be done by a separate audit team because they've already said that's going to be done. So I'm not going to be getting any marks if I write this down. Let's start. Regarding determining the form and content of the report, don't just write management responsibility, explain it. That this is the role of the management and therefore this will be seen as taking on management responsibility. We can offer some suggestions regarding what to include, but we cannot be responsible for selecting the measures to be reported on. So in reality, I'm not going to assist with this engagement. I can give you some guidance on areas to consider. So do consider water usage, do consider carbon emissions. That I can tell you, but I'm not going to be telling you what contents to include in that report, etc. So 1 mark for explaining management responsibility and 1 mark for saying what can be offered. With sustainability assurance, the threat is self-review. If you simply write self-review, that's a 0. You have to explain how there's going to be a self-review threat. So I could be giving assurance on some information that was already used or looked at as a part of my external audit. And because of that, we might not be able to identify or highlight errors. So this is the self-review threat. So when the firm provides assurance on measures which may relate to figures which were subject to external audit, there is self-review threat, and then explain that we might not be working objectively. So 1 mark for explaining how the self-review is. So there's no self-review in creating that report, but in assurance, there is a self-review threat. So we then have the proposed fee. I get a mark for saying this must be a separate engagement with a separate letter and separate fee. I get marks for identifying that this is contingent fee, which is not appropriate. I get a mark for explaining self-interest, that my objectivity would be compromised because there's a financial interest in giving a favorable outcome, so I get more money. And although this is not external audit, it is better not to charge fee, even if it's separate, not to charge it on a contingent basis. So I'm not okay with this being linked to audit. I'm not okay with this being linked to a favorable outcome. I'm happy to do the assurance part of the engagement as long as it is a separate fee, which is not contingent on a favorable outcome. The examiner said we'd be giving professional and technical marks for picking this up. Please remember this sustainability report, if it's published in the annual report, which contains the financial statements which we are auditing, this would become other information. So if the annual report includes the financial statements, the external auditor's report, and this sustainability report, this then becomes other information, and then I have additional responsibilities. I'll have to read this to see if it is consistent with the financial statements. So I get a mark for picking that up and then a mark for saying I need to see whether this is going to be published separately, this sustainability report, or will this be a part of the annual report, because then my responsibilities will change in external audit. The requirement did say professional issues. So I should consider being a specialist area. Do I have the competence and expertise? By the way, as a AAA student, if you simply write, we have to consider competence, that's potentially going to be a 0 because it's not linked to the scenario. So talk about the fact that competence and expertise needs to be considered because sustainability measures is a specialist area. There is a bigger issue because the industry is under pressure to report on sustainable measures. So the risk regarding this engagement is going to be more. There's more scrutiny on my report or my work on sustainability. I need to see if I have resources in terms of staff availability to complete this within the required deadline. So competence because it's specialist, resources for the deadline, and then be aware that this is going to be a bigger risk because there's a lot of scrutiny on sustainability report for this industry. Please make sure you always give a conclusion for risk evaluation, for ethical evaluation questions, quality management, ethics, etc. But this was ethics in particular. There was more than 1 mark for conclusion there. And everything I'd said, you can conclude here. I would not want to assist you in the selection of sustainability measures. I may be able to give assurance on the sustainability report, and this alternative should be discussed with the audit committee. And if I decide to do this, I need to make sure that I do not take any management decisions and I can get an engagement quality review carried out on my audit work done. So this is only if you go on to accept the assurance part of it. Your conclusions normally have technical as well as professional skills marks. Just to wrap up, the question in itself, yes, was long, but it wasn't very difficult. The key to passing AAA, but the case study in particular with really good marks, is making sure you're very disciplined in your time allocation. So writing time for each part and make sure you know the answering techniques for all key topics of the syllabus.